Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 7 o'clock in New York on Wednesday, 18th day of September 2024, and this is the evening report for gold and silver. Today, multiple asset classes experienced extreme volatility after the Federal Reserve convened this month's FOMC meeting and announced one of two options, the more aggressive 50 basis point rate cut. While many analysts, including myself, believed that A, the Fed would cut rates by 50 basis points, and B, if they in fact did that, it would be highly supportive of gold, the exact opposite happened. Gold lost $11.60 in trading today, settled in New York at $2,584.80, but also traded to the all-time record high of $2,627.20. Gold traded to a low this morning of $2,572 before finishing at $84.80. Currently, gold is trading in Australia and is down an additional $1.50 from New York's close at $2,583.30. Silver had a much deeper percentage price decline, giving up 2.06%. That is 64 cents per ounce, taking the most active December contract to $30.41. Overseas, it's recovered by about 3.5 cents, with December silver currently fixed at $30.43.5. The dollar had fractional losses today of 0.18%, but it was the low that garners our attention, trading to 100.233. Currently, the index is fixed at 100.978. Unfortunately, today's move did stop us out of our current trade. We went long December gold when we sent out our trade alert at $2,597. We placed our stop at $2,580. We are looking at a 10-minute candlestick chart. This long green candle represents the moment that the Federal Reserve made the rate cut announcement. It occurred at 2 o'clock in New York. You can see how it rose on a 10-minute basis from 25.94 to 26.15, then to 26.19, and finally to 26.21, with the intraday high coming in 20 minutes later at 26.27. You can also see when Powell began to speak. That is the series of large red candles taking us off the high, well above $2,600, to the low today at $2,572. We were stopped out at $2,580. So with the fact that gold did not recover from the price decline that occurred on Tuesday, further selling off today, and continuing that sell-off in Australia, have we concluded what we have labeled as a primary third wave? We did exceed a 1-to-1 relationship with the third wave once gold traded to $2,575. These red lines here represent a Fibonacci retracement of the entire rally from 2,400 up to today's high at 26.27. Today's low took gold to a 23.6% retracement, and that comes in at 25.73. Because our wave 2 was such a deep correction from this wave 1, typically the most simplistic Elliott wave models tell us to look for a shallow correction on a corrective fourth wave after we've had a deep correction on our corrective second wave. If gold continues to drop, we want to see if it finds support at the lows today of 2,570. If it does, that would signal a short corrective period a return to bullish momentum, and a final fifth wave in terms of our primary count. If gold continues to drop, we would want to look at the 38.2% fib retracement that comes in at $2,540. Those are the two areas that we want to look at for a potential end to the selling pressure that began on Tuesday. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.